Hey guys, back with another daily update video. The market just closed. It's Monday, June 29th at 4:09 p.m. And it was an overall good day in the market. Let's take a look at the heat map. Mostly green on the board, right? And if you take a look, a lot of the tech stocks were doing really well compared to how they were doing last Friday or the end of last week. So looking at some of my favorite stocks here, AMD was pretty much sideways at 0.1%. Micron was up 1%. Other semiconductor stocks, Nvidia and Intel, also a little bit sideways to a little bit up. Surprisingly, Amazon was down a little bit. I mean, pretty much sideways, but that's interesting. Facebook was actually up, given all the recent kind of bad publicity they've been receiving. So that's actually a surprise. So overall, the market had a good day. If you were bullish, had a green day. But some interesting things happened in the semiconductor sector, and they're actually still happening now. And that's because Micron is currently reporting earnings. So here's the graph of AMD, and as you can see, it was pretty much in the red all day long. Had a little bit of a rally midday, kind of traded sideways from then on. However, 335, really at 350, you see it's got this huge pump, this huge rally, and actually still rallying as we speak. And that's because Micron is currently reporting earnings. So a lot of the semiconductor stocks, including Micron, have been pumped, are actually currently being pumped right now by the earnings. So they must have been reporting good earnings right now. Here's Micron. Oh, I mean, take a look at this. I really wish I had, look, Micron did nothing all day long. I mean, it just traded absolutely sideways right where it opened. It looks like everyone was just waiting for this evening. And then look at this, at exactly 4 p.m., it went from $49.15 to currently $52.70. So let's just do some quick math. So 52.70 minus 49.15. It just rallied $3.55 in the matter of from 4 to 4.8. So in a matter of 20 minutes, it just rallied $3.55. If I had owned shares, or even if I just opened up a cash secured put on it, I would have made money. But I didn't make any plays on Micron today. But gosh, this is why you don't play earnings, because it could have very easily have been the opposite way down. Earnings swings are just so big, meaning the stock could go up and down so much that's why I'm so afraid of playing or holding options through earnings, because they can absolutely make or break you. And it's almost a 50-50 gamble every time. But yeah, if you were on the right side of this, if you had any sort of semiconductor stock right now, depending on, if you had a covered call and you don't want to call it away, you're not looking so great. But if you had a cash secured put or just held these shares right off the bat, I mean, you're looking great. If this was me personally, if I had held shares right now and the stock opens up somewhere around here tomorrow morning, I would sell it off immediately, because I'm sure a lot of people are also going to be taking profits tomorrow. So I would assume that we're going to bleed off a lot of these profits tomorrow as the day goes on, especially in the morning. But man, that would have been a nice one-day gain if I had held shares. So, just taking a look at the Micron. The other factor is that this week is only a 4-day trading week, because July 4th is this weekend. So Friday, the markets are closed. But I had looked at selling some puts on Micron, but look at these premiums. These premiums are insanely high. They're in the hundreds right now, which is crazy. But, so tomorrow, these premiums are going to just get killed because it's going to be post-earnings. But, in retrospect, maybe I should have looked at opening up some puts in Micron this morning and collected some of these sweet premium. But whatever, hindsight's 2020. There's always another trade. But I did end up making 1/2 trades today. And I know a lot of people in the comments have been asking me to play other stocks other than AMD and Micron and some of these tech stocks. So, you ask and you shall receive. So I actually ended up making a play on Disney today for the first time. And look what Disney did. So I saw this morning that Disney was in the red and had a pretty strong rally. So actually, around mid-morning, I ended up making this play. And what I did was I opened up a strangle on Disney. So if you're not familiar with what a strangle is when you sell a put and you sell a call on the same stock, and they're both expiring on the same day, so this Thursday. But obviously you're selling a put and you're selling a call, so you're kind of playing both ends of the spectrum. So I'll show you what I did. And so what I did was I put these in as a combined order. So just as an example, my put that I sold on Disney was at the $100 strike price, so down here, and I collected $19 in premium for that put. And then I sold a call at the $115 strike price. So that was up here, and I collected $50 actually at the time in premium for that. So in total, I collected $69, or I'm sorry, yes, $69 in premium between my two contracts. Now, if you wanted to do that in Robinhood, what you would do is, let's say you wanted to start with the put. So you'd select the put that you want to pick. So I selected the $100 strike because I felt that would give me, at the time, Disney was trading around $110. So I felt like that gave me a good buffer of a $10 cushion in case Disney continued to sell off this week. So I wanted to play it safe on the downside. So you would just click this plus sign, and you can see it's going to add it to your kind of cart here, if you will. And then you're going to go to sell a call, and then you're going to keep the expiration date the same because remember, they both have to expire on the same day for it to be a strangle. And then I selected the $115 strike because I didn't think, like I said, Disney was at around 110 when I opened these positions, and I didn't think that in 4 days Disney was going to rally to 115 because if anything, I thought Disney was going to trade sideways or go down, which is why I left a bigger buffer on the downside, on the put side, because right now there's really no good news that could come out for Disney because the cases in Florida of, the illness, I should say, so I don't get demonetized, are increasing. They've already delayed the parks reopening, and then now there's kind of questioning on whether the NBA is actually going to play or not because some of the NBA players don't want to play. And, athletes in other sports are just getting sick in general. So, there's really no good potential news for Disney. So that's why I played it a little bit more aggressively on the upside, on the call side. And I played it more conservatively on the downside. Because I thought, like I said, Disney was probably going to trade sideways or go down for the rest of the week. So then all you're going to do is you're going to add this to your cart as well. And then you can see it's going to change to custom here. And it's going to have you give you a synopsis of what you selected. So you're selling a 100 strike put, and let me use my pen here so I can show you what I'm pointing at. So you're going to sell, right? You want both of these to be sell, right? Because if you're a Theta gang and you want to collect premiums for selling options, you want to make sure you click the sell, and then you sold the 100 strike put at the expiration date of 7/2, and then you sold the $115 call at the same expiration date. So just as a double check, you want to double check your strikes, make sure that's what you want. You want to make sure that your expiration dates are the same for your put and your call, and you want to make sure you sold them. And then you'll have the individual premiums that you're going to collect, and then you want to make sure this says total credit, right? Credit means that you are going to collect that money. If it said debit, that means you would owe that money, which means that one of these or both of these probably say buy, which is not what you want if you're looking to sell a strangle. So, if I were to make this play right now, you can see that it's showing that I would collect $62 in premium. Because I opened this earlier in the day, I was able to collect $69 or 69 cents per share times 100 shares. And that's because, Theta Decay has already eaten away at some of these premiums because it's a few hours later from when I bought it. So that's how you would make this play in Robinhood, but that's what I did. So for me to get max profit on this play, I need Disney to trade between $115 and $100 until end of day Thursday when these contracts expire. So the risk here is that if Disney goes above 115, then I have to sell shares, 100 shares at $115 per share. So I would actually lose money there. So it's a little bit risky. If my Disney play goes below 110, below 100, that means that I just got assigned 100 shares of Disney at $100 each. So obviously you can see by playing both sides of the equation, I can't lose on both of these contracts. If I win here, or if I win here, I can win at both, but if I lose here, that means I automatically win here because, the strike price or the stock price can't be below 100 and above 115 at the same time. It has to be one or the other. So depending on how you look at it, I could either get assigned shares and still collect $51 in premium, or have to sell off 100 shares at 115 and still collect $11 in premium. I know that's not much of a consolation, but I'm just trying to explain to you how the Strangle works. Now, if I know a lot of people on my channel like to trade spreads, so you're probably already familiar with this because the spread basically gives you a monetary profit or loss, meaning there's no way, if you play the spread right, that you're going to get assigned shares or have shares called away. So you can also extrapolate that theory onto the Strangle, because you can actually make it so that you have a put spread on one side and a call spread on the other. So you actually have 4 contracts open, and that's what's called an iron condor. So that means that you can have it so that if the strike goes above 115, you'll just lose money and you won't have to sell off shares. Or if the stock price goes below 100, again, you'll just lose money. You won't get assigned 100 shares. So depending on how you look at it, like I said, I like Disney as a stock. So if it drops below 100, I'm okay getting assigned shares. And I think below 100 right now on Disney is a good price, because if we go back and look at some of these historical, I have to erase some of this. We go back and look at some of the historical data on Disney, we can see that the last time Disney was 100 was like May 13th. So kind of in the heart of the pandemic. And ever since then, it's never really been that low. So, and even that being said, the lowest Disney has been recently is 80. So $20 below 100. So I think 100 is a good spot right now for Disney. And like I said, actually today we had a rally. It went from about 108 all the way up to 111. So it gives me a little bit more cushion. So I think I'm okay with my positions right now. And the other thing is, what you can do is, let's say one of these strikes is getting tested. You can roll that leg out, or that half of the equation out, and then let the other one expire worthless. So you'll still make money at one way or the other, because the max you can lose is you can only lose on one side. I know this might be a little bit confusing, so if you have any questions or comments, please leave them in the comments below. And myself, or I have some really good viewers that have been helping one another out, so I'm sure if I don't do it, someone else will help you out if you have any questions about this. But like I said, this is called a Strangle. There's something similar called a straddle, and a straddle is when the call and the put are at the same strike price. So everything else is the same, except you would have a $100 put and a $100 call, or $115 call and $115 put. So that's called a straddle, as opposed to a strangle. A strangle gives you kind of a middle zone where you want that stock price to stay between. So again, I think between 100 and 115 on Disney is a good middle ground where I think Disney can stay. So if we just take a quick look, $100, this is where Disney has been trading currently. $100 is down here. So if I want to just draw a quick kind of little line, that's $100 here. 115 is right about here. So I need Disney to basically trade in this range for the next, Monday's already over. So for the next 3 days, Tuesday, Wednesday, Thursday, I need Disney to close somewhere between 100 and 115 for me to have both of those options expire worthless, and for me to obtain my $69 of premium, which is my max profit. So that's what I'm looking at right now in terms of Disney, and that was the one play I made. I was considering making a play on IWM as well today. So if we just take a look at the Robinhood chart on IWM, because it traded kind of flat all day long. It actually opened up green and then traded flat, which was great for me, because I love flat days, because if you're Theta Gang and you just want the option premium to expire and let time just eat away, because remember, by selling options, time is always on your side. So you want time to just eat away at the premiums, and I love it when stocks trade sideways. So when I saw that IWM was trading sideways all day, I thought it might be a good opportunity to get into a cash secured put again for this Thursday, because again, it was also a short trading week. But I was waiting, I was hoping during power hour that IWM would sell off, but the opposite happened. It actually rallied up about $1.50, and it's still rallying after hours. So I didn't end up opening a position because, again, the premiums would have been lower. But if I wanted to sell a put on IWM at the end of the day for about 0.4%, I would have to get in around like 133.5, 134, which is reasonable. I really don't think that IWM was going to get that low. because again, like the Fed just is not allowing IWM to drop. They keep pumping it after hours so that it always either trades flat or just rallies a little bit. But we'll see how the market opens tomorrow. I was hoping that it would drop a little bit overnight and then open a little bit in the red tomorrow. But because one day of trading has already passed, if I do open up a put tomorrow, I probably have to get in at like the 135-ish area in order to get 0.5% return on my risk. But that's not bad because that's still about an 85% chance of profit. So we'll have to see how the market opens tomorrow. But maybe I'll open up another put on IWM. We'll see if I want to do that or not. Because again, between my Disney plays and IWM, it's going to tie up pretty much all of my profit. And actually doing the math in my head right now, just very quickly, I'm not sure if I actually will have enough capital to make the IWM play tomorrow. But we'll see. We'll see how it opens. But yeah, I'm kind of glad. If you take a look at AMD, I'm kind of glad I didn't open up a position at the end of the day on AMD because, I would have had to get in at a very high strike price. But it kind of sucks that I wish I had some cash on play. I mean, the last time AMD was at this level, actually both of the two recent times, it was at like 49. It rocketed right back up and looks like it's doing the same thing again. So it looks like $49 is a pretty strong support level for AMD right now. So, something to keep in mind next time if AMD does drop a little bit back to 49. Again, taking a look at Micron. I mean, look at Micron. Look at that spike. That's just crazy, crazy. It went from 48. Right now it's at 52.22. I mean, it's craziness. I really wish I had Micron shares. I really wish I didn't sell off my Micron shares because I think I had them at 49.50. And 49.50 to 52.20 would have made some great profit, There's this meme going around that stonks only go up, and I should really listen, but I mean, looking at the RSI, it's technically overbought right now, but I'm sure it'll come down after hours and in the morning pre-market because people are just going to take profit. But, again, there's always another trade. As long as I'm not losing money, I'm happy. So let's take a look at SMH. The semiconductor ETF probably also popped, actually, but not quite as much. Let's take a look at it on Robinhood. I'm actually surprised that it didn't pop, considering that NVIDIA and AMD, actually it did pop, okay. Just didn't look like it on that start, but so went from, after hours around 149 to 151. So that popped too, due to Micron's earnings. But, the more and more I research SMH and the more I look at it, I'm really, really liking it. I think if we have another dip, I'm going to put out some money into SMH to hold long term. But again, looking at the options premiums on SMH, they are very juicy. I will say I did look into opening up a position on SMH this morning before I made my Disney play in terms of opening up a put. But again, I just wasn't sure what the market was going to do this week or how it was going to react. And it looks like the market has a little bit less fear this week than it did at the end of the week, just because it wasn't like a bloodbath day. It wasn't a lot of red. It was a lot of green or sideways, which is kind of good. And also considering that it's a short week, maybe we'll just trade sideways going to the long holiday weekend. But, that's just my thought process for the trading day today. If you guys want to see, let's see what was the most common options plays. So Facebook was really common, or really popular today, most popular actually. And that makes sense because I'm assuming, Facebook was up $4. So I'm assuming people saw the sell-off at the end of last week as a buying opportunity. And it looks like it's kind of 50-50 on calls and puts, but I'm sure a lot of people bought into Facebook right now because they bought the dip. But, Boeing was popular today. So I don't know if you know, but Boeing tested their 737 MAX airplane, actually, in actual flight. And so that got a big run up. Look, Boeing went up $24. It was actually up over 14%. So that was very good news for Boeing. And I believe as of right now, the flight test has concluded, and I think everything was okay, or I think it at least landed safely. So Boeing was up, and you can see the call to put ratio is 75% call option. So people are really, really bullish on Boeing right now. AMD was fourth most popular. Again, people are very bullish on AMD. So I think they probably saw what I just figured out, that $49 was a pretty good support level for AMD. So they're really bullish on it right now. Here's Micron again. I'm surprised. Micron is almost 50-50. So seems like people were undecided on how Micron was going to react after hours, maybe because of earnings. But yeah, again, like tech is leading the way, right? Facebook, Apple, AMD, Tesla, Micron, Microsoft, Amazon. Workhorse, I don't know what this is, but I did see it in, I believe, Reddit recently. So I'll have to look into that. But I mean, Workhorse, look at it. It was up 50%, up 56% today. So I'm gonna go ahead and assume this is some sort of meme stock or hype stock now. I have to look into. I don't even know what they do or what they sell. I have to Google it. But again, this is like, it seems like every week we have another hype stock that people are just pumping into oblivion, and they're almost just like pumping up schemes. But you know, I tend to stay away from them, just because I don't want to be caught on the losing end of a pump and dump, because that's how you get burned really badly. But to each their own, right? So as far as my daily chart update, here's the number of deaths, unfortunately, that are reported every day. And in the United States right now, over almost 124,000 deaths have unfortunately been reported since February 29th. And you can see things are trending upwards lately. And it actually explained this spike in deaths on June 25th. And it's because New Jersey authorities added more than 1,800 probable deaths to the state's totals. So that's interesting. You know, for the most part, the trend was going down, but we'll have to see. It looks like we're kind of plateauing right now, and hopefully we stay level or go down even more and not rally back up, unfortunately. But you know, just some, depending on how you want to take this chart, this could be somewhat neutral news, but we'll have to see and wait how the days play out. So here's another graph. I know it's a little blurry, but this is just for some reason how it was pasted on Twitter. But this is the overall market sentiment. And you can see right now, we're actually still in the euphoria phase. We're not actually in the panic phase, which was in like March, April. So we were kind of neutral. And then now, since roughly May and June, we're still kind of euphoric. You know, I'm sure you've heard this before, but Warren Buffett says, be greedy when others are fearful, and fearful when others are greedy. So I would say right now, people are being greedy. So, you know, that's why I'm actually just kind of playing it super safe. And I actually thought about it over the weekend. I know I say my kind of personal goal is to make at least 0.4% return on my risk in order to make a trade worthwhile. But maybe instead of being all cash, maybe I'll just lower my baseline to like 0.2% return on risk. That way, at least I'm still making money, but I've also become more conservative. So I was thinking about doing that this week if we have like a very choppy week again, but we'll have to wait and see. But I think that might be a good strategy, because even if I do that, just bring out my calculator real quick. Even if I collect 0.2% consistently over 52 weeks, that's still a 10% gain on my investment for the whole year. And I believe I saw a statistic that for the past 20 years, I think the stock market has returned about 7% on average. I know numbers fluctuate depending on what source you read, but that would still at least be in line with or be greater than the average stock market return over that 20-year period per year. So that's nothing to sneeze at. It's not like I would be losing money per se, and I should just kind of go long term and just buy and hold strategy, but something just to keep in mind. Here is another chart. So this is interesting because what these numbers represent are the number of bonds that the government has bought from these specific companies. So what this is saying is that like the government is actually relieving debt from these companies instead of the overall market. So it's kind of preferentially giving like AT&T, United, Comcast, Anthem, Walmart like preferential treatment because it's buying their debt. So instead of doing like an ETF that covers a lot of stocks, individually these stocks like AT&T is the worst and United Health is not far behind, but they're being helped out by the government. So take that for what you want, but I mean it kind of is unfortunate that this is like our tax dollars at work and we're essentially bailing out these companies. On the flip side, if you're invested in some of these companies, that's going to be good for you because theoretically their stock price should go up. But just kind of keep that in mind of these companies. And I'm sure there's more than this. These are probably just the highest or the biggest companies or the biggest buyouts or bailouts. But it's interesting. So here's a chart here. Now, you've probably noticed that a lot of my charts have always been bearish or bad news. Here's a chart that's actually good news. So this is the U.S. pending home sales index. So if you actually see right now, we are at 99.6% of homes sales that are pending. So that means the housing market is actually doing really well right now. I mean, we crashed hard, but we've actually recovered a lot and very quickly in the housing market. So what this is showing is that historically, actually dating back to recent times, the pending home sale index, or in normal conditions, has been around 80%. So right now we're actually at 99.6%. So we actually fell to the lowest levels in April, and we've rallied really hard back up. So if you're invested in REITs or real estate index stocks, or other real estate companies like Toll Brothers maybe, or Lennar, or other home builders, this is good news for you, because that tells you that although the real estate sector kind of plummeted a little bit, or home sales dropped very significantly, the most they've ever dropped, they've actually come back up quite significantly. So that's good news. I know on this channel I show a lot of bearish news and bearish graphs, but here's a bullish graph for you. And then lastly, here's a chart that's showing civilian employment per population ratio. And as you can see by the graph, we are at the lowest number we have ever been since 1948. So in February of this year, there were 6 million unemployed people in the United States. And today, currently, there are 21 million. So in order for us to get this ratio back to its peak in 2000, we would need to create 30 million jobs, which is very hard to do. So again, I know I show you a lot of bearish news, but the data that I find is all, negative in terms of the economy. And if you haven't seen my previous video that I put out this weekend about why I think the stock market bubble will pop, I'd highly go and recommend that you check it out, because I think what's going to happen is once the Federal Reserve steps away from the equation and basically turns off their printer and stops quantitative easing, and maybe does negative interest rates, even though they've claimed they won't, I think the stock market is going to get in line now with the economy. And by that, I mean, I think the stock market is going to plummet. The other thing I want to leave you with is just keep in mind for your trades, if you're opening up long data expiration trades, maybe this month, that the GDP numbers for Q2 of this year will come out at the end of June. So obviously everyone expecting really bad numbers, it's going to be negative, and it's going to confirm that we're in a recession because Q1 numbers were also negative. But I think that if the numbers are worse than people are expecting, then obviously we're going to have a pullback in the market. So if you have options that are expiring around that time, or you're thinking about opening up new positions around that time, end of the month, just keep that in mind, because you may want to compensate for that, just as a heads up. So as always, if you have any questions or comments, leave them below. I've gotten some really good feedback on my videos lately, and I've tried to address some of those issues. I know people have been saying, why don't you trade this stock or that stock? And, I'm not, if I don't like the stock personally, I'm not going to trade it. I know there are other stock channels out there that will kind of poll the audience and trade a stock, and they're okay losing money on it. But those channels are monetized, and they may have thousands of subscribers. So even if they lose, let's say $100 on that stock, their video may generate, let's just say $200 in income. So they're still going to end up overall positive. Whereas me, I'm not monetized yet. So any money I lose, that's straight out of my pocket. So I don't want to take gambles or risks that I don't want to afford to lose right now. But I am rather close to getting monetized, and I thank you for your support. So thanks for that. And I'm going to leave you with just one more thank you for kind of sticking through this with me. And as always, happy trading.